looking at this trade that we see in dollar yen right now, I think is perhaps most fascinating. 155, we haven't seen these levels since 1990. On the currency consideration alone, the BOJ should be making a move here, but it won't. Why?
I think in the short term, they're going to wait for the BOJ meeting to finish off, obviously the next 2 days. Then we'll see where they draw a line in the sand. Clearly, the 155 level's now been breached. So I think the important thing to keep in mind is it won't change the trend, but they just don't want very large moves. The trend is in place because of dollar strength, higher inflation, a bit of a higher oil price. So we'd expect probably some intervention post that meeting, but also you could see it'll depend also what happens in terms of how hawkish that meeting is to also bring back the yen into a more stable trading range.
Indeed. So looking out to see whether or not we could see some hawkish signals coming out of this meeting. But if we did see intervention, what might that look like beyond just the jawboning?
Yeah, I mean, I think they will be selective. Because there's only so many bullets you want to do, and you also want to smooth the move. Right now, the move is, of course, breaching 155, but it's not uncontrolled. So it's about the speed. So we'll have to see. Last time they did about 3 interventions.
At the moment, we're also in the full throes of earnings season as well. The biggest reporting week of the season. Just give me your pulse check, I guess, on what we're seeing now with regards to the macro earnings outlook. What's standing out for you from the numbers that we've seen so far?
Yeah, that's a good question. So we're about 20% through earnings, but some early conclusions are that actually earnings are beating handily, about 8% average earnings surprise, which you also see because earnings are massaged into numbers. Interesting enough, revenue beat is only about 1% for the market, which is actually lower than the previous quarter. So that's really the issue because we've obviously had very strong recovery in equities into earnings. Some stocks are obviously up with events, so you see some penalties on a miss more than a beat in the short term. So I think that's the takeaway, but it gives you opportunity to actually post-earnings season, go through the rubble and figure out which names you want to reinforce as well.
Right. So do you think tech's looking overbought right now? And if you are looking for opportunities through the thick of earnings season, where are they?
Yeah, so tech definitely obviously has led the recovery. And we saw the breadth of the market, of course, the Mag 7, Fantastic 4, and maybe they'll be renamed, maybe I want to trademark Tremendous 3. But the issue is we have to get used to that because in 2023, we came off a very tough 2022. We had AI, big earnings growth, now more differentiation. The EV sector has different fundamentals than ad spending.
You know, the other thing I'm also looking at here, earnings season aside, I flagged it earlier, the 10-year also tracking near 5%. That's probably giving the equity outlook a run for the money, right?
Yeah, we see sensitivity as the 10-year gets closer to 5%. We think as you get closer to 4.75 to 5, you see a little bit of more competition for capital. Obviously, the short end of the curve right now is attractive, especially the front end, especially with 2-year yields near 5%. We'll have to see if we breach. Obviously, we have the PCE numbers tomorrow, and there's various forecasts for that. But we'll need several numbers in line to better on inflation before the Fed changes their outlook.
Right, and that's because we've seen expectations around Fed cuts really moving fast here, even being pushed out to 2025, right?
That's correct. We think Fed cuts have been more derailed in the short term, but you know the delay is there. But there's more cuts in 2025 and 2026. That's what's happened in the short term. But if you look at an average year, these forecasts do move around quite a bit. We could see, for example, 2 or 3 cuts also come back on the table. Right now, we're closer, probably we're thinking 1 for the year, beginning in September. But it can move around based on that data. But clearly, we're not going back to where we were earlier in the year.